general nature only, and that your personal circumstances have not been taken into consideration. Okay, all right, so let us get started with today. Have a look at what's taken place in the market, what's happening. First of all, the thing that we must all talk about is non-farm payrolls. All right, so the numbers came out last Friday or early hours of Saturday morning, depending where you are located. And basically the numbers came in exceptionally well. 86,000 new jobs were added to the expectation, bringing us in at 271,000 jobs for the month. Unemployment figure for the US fell to 5%, which is an all-time low since 2008. And on top of that, average earnings were up about 0.4%. Which is the highest they've been since July '09. What does this all mean? Okay, essentially, what it all means is that pretty much now, if the Fed Reserve does not raise rates come December time, well then everybody's going to be left scratching their head. They've basically got the green light ready for liftoff. Really, the only thing that's going to stop it from happening now is if in the next non-farm before the rates decision, if the numbers really disappoint, or they change back, or they get revised to a much lower amount than what we saw on Friday, that's pretty much the only thing that's going to stop a rate rise. All right, now the latest poll on analysts, what they're thinking, we're at 70 to 75% think that December they are going to pull the trigger. Now, what does this mean? This means now all of a sudden that over the next 2 weeks, where there is not major data coming out, everybody starts to position themselves into the market. Okay, so the longer term traders, all those people who are long US yen like myself for a long time and left the market in fear that it was never going to happen, all of a sudden they get excited again and they start to position themselves into the market again, which basically means it starts to drive a pro-dollar rally in the lead up to the interest rate decision. So we've got a little window of around about 2-3 weeks before any major data comes out, which allows us to take advantage of the positive momentum or the positive feel that the market has given us. All right, so I want you to keep all of that in the back of your head as we analyze today's markets, and let's have a look at what we've got actually in the terms of data for ourselves this week. Now, give me one moment while I set up my pen. All right, so it all pretty much starts for us in Australia tomorrow with the NAB confidence number, and we got China CPI figures. All right, now everybody's been doing not so well, so the Chinese government has been sort of manipulating and interfering and propping up the reality of perhaps how China's economy is doing. So we're not really expecting nothing drastic there. Of course, China is very important for our own Aussie dollar because we're so dependent. We are a major exporter to them of all the commodities, as we all know. We got Kiwi data Wednesday. I think the one that's going to be possibly the most impacting this week is the euro. We have Mr. Draghi speaks, and we have German GDP figures over here on Friday. Okay, so this is probably going to be the most moving data that we have this week. We've got Aussie unemployment rates, US unemployment. So I think due to the nature of the data that we have this week, and keep in mind as well, the currency that's going to be under the spotlight, I think, this week for us is going to be the Euro USD. It's going to be the most data dependent, but not only that, you've got to remember what these two economies are trying to do. The euro is trying to drive down the value of the euro at the moment with easing and quantitative easing programs, whereas the USD is now pretty much got all the green lights that they want to increase their interest rates and increase their currency. What this all basically means, the combination is like a double-edged sword. One wants to go down, the other one wants to go up. So therefore, if they both got their own way, the Euro USD could drop, and I think we could look at it at about 105 pre-decision. Okay, so does everybody know what I mean by that? So pre-Fed rate decision, we could be as low as around about 105. When we have a look at our charts, we'll see that there's not much stopping us, and the general positive vibe of the market and the nature of what these two are trying to do could get us to this number. Okay, now again, remember that everything that we talk about is if we don't go to 105, we're not really worried. We're not here to predict where the market's going to go. We're here to find the trades that give us the best probability to take advantage. All right, so for anybody that's new in the room, it's not about if we're right or we're wrong. It's about can we find the trades that give us the best probabilities. Let's get started. Aussie dollar. All right, Aussie dollar last week. Now, something important I want to show you here. Let me zoom in a little bit. I had this line drawn at about there last week. Does everybody remember? And this is the beauty of pattern trading, that we have to be able to make the adjustments. Okay, we had these 2 wicks outside of the support line. I was happy with the top line, and I said, does everybody remember, that we may have to make a little bit of adjustment to this line. Can I just get confirmation? Does everybody remember that? Or if anybody strongly objects to what I've just said, please let me know. Okay, it's unanimous. Everybody said yes. All right, so you've got to keep that in your mind, and I was concerned because these 2 lines, and I was trying to make it fit in, and what I was really hoping for, what we were all hoping for, is that we may have got a trading opportunity out of that to go in this direction. As it turned out, the setup did not arrive, so there was no damage done. We just simply didn't take a trade, and then we get non-farm, which gives us this big candle. The decision to make here is, do we classify that candle as a bearish breaking candle that drives us and tells us to go in the other direction? Now, normally, if this line was drawn in very sweet and narrow and perfectly, I would say, yes, that's my signal. We've taken out a low and it's a relatively bearish candle. However, with that thought in mind, before I make that decision, I always readjust my lines and have a look at how everything looks. I readjusted, trying to fit that bottom in now. You can see over here that it fits in a lot better. That one's really nice, and all of a sudden this one's nice and squeaky. So therefore, what does that mean, guys? What does that mean? Therefore, are we in short? Is anybody in short right now, Aussie dollar, because of this pattern? Good. Okay. Now, a few of you are saying that now we're in a position that we can trade up. Well, perhaps, but we're not ready to pull the trigger right now. So what we're going to do, Aussie dollar, this week, I've still got a little bit more room of adjusting left. I can possibly move this line up to about there. That's my limit. All right. If I'm moving it to here now, then that's not really a line. So that's about my limit over there. I'm happy to have it sitting right there right now. What I'm going to look for, you need to wait till tomorrow morning, 9 a.m. Hopefully what we'll have is this candle ends up being somewhere like that. That would be nice. And then you put a pending order for a break back up the channel. Okay. Now remember, fundamentally, after everything that I just said this morning, would this trade be in favor of what I said or against what I said? That's right, guys. It's against everything that I said. Now remember, we got to trade what we see. All right, you got to trade what we see. So the good thing about price action is that maybe it doesn't give me the setup and then I don't go into the trade. But if I do get the trade, who's happy to take it? Good. Some people are not sure. What you got to make a decision about very early in your trading career, for anybody who's not sure, is this. You're going to hear so many things, fundamental news. You go to a website, you talk to your neighbor, you grab a coffee, everybody's got an opinion. Okay, the problem with the fundamentals is that if you don't get it from the correct source, you can easily be swayed in one direction or the other. The technicals never lie, all right? I would say that myself, I'm probably a 90% technical trader, 10% I look for the fundamentals. The way that I would see this trade is if my technicals support my fundamental view, it just makes me feel all that warm and fuzzy feeling before I take the trade, all right? However, I will take trades against my fundamentals if it's in my rules. And you know what? This is a converging triangle. How many converging triangles have we taken this year? A lot. Have we had good success from it? Immense success. So therefore, if I see it, I'm going to trade it. I'll call it out tomorrow at 9 a.m. Just make sure that you are up to date with your Twitter. I know I can see some new people in the room, so I'll just put it up again. Chat FX. That's my Twitter handle. Add me in, follow, and then if I see it tomorrow, I will call it out. Okay, so that's our game plan for the Aussie dollar. Pretty simple. We may get a trade set up, we may not. If we do, we're going to be looking for our inside candle at the bottom of the supporting converging triangle. There appears to be plenty of room here, so it depends where this candle finishes, but even if it finishes up here somewhere, your stop will be down here, and there's enough room there to be able to take the trade. Any questions? Okay, question being asked, but is the tech on the other chart counteract the tech on this chart? We haven't looked at another chart yet, Linda, but I think I know what you mean. If the technicals on one chart say something different to another chart, well, the short answer to that is as follows. No two currency pairs are 100% correlating. Okay, so meaning that currency pairs can move similar, but they don't move identically. Okay, so just trade if you're finding it difficult. If you get a setup in two different currencies in the same direction, you may choose to only take one of the trades. Okay, if you get them in opposite directions, I don't mind when I get them in opposite directions because they kind of auto hedge each other out a little bit, which gives me a little bit of extra protection in the market. Okay, so hopefully that's answered that question. I always go back and I always say trade what you see. If I'm looking only at the USD, okay, I'm only trading that particular one, even if something on another chart says something different. Okay, all right, let's move to the USD now and let's have a look at what we got. All right, last week the EURUSD didn't really give us anything. It was the chart that I was the most confused about, and I said, if anything, let's see if we can perhaps get something happening in this gray area. And as you can see, nothing came up, so we've taken no trades. How do we feel about the EURUSD now? Question being asked, John, shall we take the US dollar into account? With every currency pair that I trade, John, I'm taking both. When I look at the chart, I'm actually taking both of the currencies into account. So if we just trade it based off the chart, we should be fine. Okay. All right. So I'm getting good. You guys are getting good at this. Okay. So we're looking for shorts. Now, think about what you've just said, and think about how much, especially for the ones that have been with me for a longer time. You've just watched the euro drop down. Let me measure it out for you. 700 and roughly 30 pips, and you're still looking for a short trade. Everybody, pat on the back. Good stuff. Why am I looking for a short trade? We've just broken a major support level. Okay. So we're going to have a couple of options here. I'm going to trade this one right now, but I'm going to give you a couple of options in how you can take advantage. Now remember what I said at the start. This trade supports me technically to what I believe in fundamentally. The euro wants to weaken their currency. All right, so they're happy. They've come out and they've said that they're going to stick with easing. So they want theirs to go down. The US wants theirs to go up, which basically all of that supports this break and continuation down. Now, if we're wrong, what's going to happen? We're going to get stopped out. Does it matter too much? Well, no one likes to get stopped out, but that's the part of trading that it's all about. So let's set this up. I'm going to go short. Let's have a look how we're going to do it. I'm just going to drop in to a 4-hour chart for one moment. Who wants to go in at market? Who wants to go in pending order? Can I just get a show of hands? Market or pending order? Okay. Okay, everybody's really defensive on this one. Only 3 people said market. Everybody wants to go in pending order. All right, well, I'll go with the masses. There's only one danger, guys. If we go in pending order, it means that there's a chance that we don't get triggered in the trade. All right, so let me try and measure out. Let me zoom in a bit, and I'll try and play it by feel where I think it might go up to. All right, I think at about here. I don't want to wait any longer than that, and I hope that I get triggered. So for those who don't see the trade, I'll just explain it. What we're trying to do is we feel that the market's going to go down. So we're hoping that the market goes up, hits us into our trade, and then drives down. Okay. Now, typically with this trade, we've already got a setup. We should have been in the market right here. If we traded it as we saw it, by getting at market now, you're already getting a better price, but we're going to try and get in a little bit better, and this is the number that we're going to go try and get into. Okay, we're going to place our stop above this last swing, and we're going to try and go in this direction, and we're going to go for about 2 to 1. All right, everybody understand the game plan? Some of you are telling me that you might miss out on this trade, that you don't want to participate. That's fine. If you feel uncomfortable about it, this is a trade that may make some of you feel uncomfortable. I'm still going to trade it, but just at least watch it. Okay? All right, so here we go. Let me get rid of my markers. I'm thinking here 107 or 108. Where are we now? 107.64. I'm going to go in 107.95 or 93. Here we go. Right click. Let me measure my stop first. My stop's going to be about, let's say 115, and I want to risk $100. $107.93. Okay, let me work out the size. 1 second. I want to trade at about 66 cents per pip, which is, let's make it 05. That's about $100. Okay, 05, 107.93. My stop will be, I'll adjust it in one moment, 109.16. And my target, I'll adjust it in 1 second. Here we go. All right, let me adjust the trade now. Let me slip over to a daily chart. We'll see it a bit better. Okay. Yep, the stop is in the right place. I'm happy with that. And 2 to 1, I've got to move this to about here somewhere. So okay, let's zoom out and let's have a look at it. All right, now that I see this low down the bottom here, let me just move it up a little bit. Okay, does everybody understand what we're doing, what the trade, etc.? Question being asked. We don't need to use the daily with the last fractal. Well, I am in a 4-hour chart, Ray. I'll show you. Because generally when we trade this, when we have such a support, okay, what can happen is the market can come back and retest it and go and shoot back down. Now, if it goes through that march, well then that's it. Our trade idea is over and we don't want to trade it. So what I'm doing is I've taken the trade based off a 4-hour chart. So if I go into my 4-hour chart, you can see now that where there's our trigger, there's our entry, and see there's the fractals and my stop is above them. Okay, so I have put the stop above the last fractal, but essentially what I didn't mention is I've taken the trade based off a 4-hour chart. All right, um, the level was broken through on a 4-hour or a daily. That part didn't matter, but that's how I've placed it. I've tried to come in tight on the stop. Okay, so let me summarize. If everybody is clear on that, let me tell you, these are the numbers. I am trying to jump in at 107.93. My stop is 109.16.7. My target is 105.63.5. Now remember, if you get to your 1-to-1 point, please make sure that you take some kind of action. Currently we're at 68. We're still about 25 pips away from trigger. So hopefully we get triggered. It's a trade that I actually want to be in. So to be honest, if you guys said jump in at market, I would have been in at market already. But let's see if we can get in a better entry. And I'm risking it around about $100. That's what I always risk on this account. As you can see, there's our balance that you've been tracking over time with me. All right, let's carry on. GBP USD. Look at this, guys. Wow. Did anybody trade it? It snuck up on me. I've been really, really busy and I didn't get an opportunity to send out this tweet. All right. But last week we were here, there. We drew out the triangle and we said, let's wait for the break. You can see how we teased it over here, but none of those were clear signals. So there was no upward trade. This one here is as clear a signal as you can get. Look at that big bear candle. It even took out that low. Basically what that meant was Friday morning you enter your trade there in this direction. So let me see who took that. 1, 2, 3, 4 of you took that trade. 5, 6. That's good. All right, because remember, this is the more difficult one to take psychologically. Okay, and also on top of that, taking it knowing that you're leading into non-farm payrolls. All right, but this is one question that I get asked a lot from you guys. What do we do when we take a trade and we're leading into a big news announcement? Now, the reality is that news announcement can often help our trade as much as it can hurt it. All right, so what I found that in my time is either the only one piece of news that I may get afraid of is a non-farm, and if that's you, well then create something in your trading rule that says, well, I won't trade on that Friday, as an example. Okay. Otherwise, trade what you see and just get comfortable with it. All right. See that piece of news is what made this trade happen for us. All right, so that's over now. So let me see if I can find something else. Give me 1 second. Okay, who likes that falling wedge? What do we think? Okay, good. All right, it's not a channel, it's not a parallel channel, but it's a falling wedge. All right, which basically gives us 3 trading opportunities. It gives us this opportunity, this one, and that one. Okay, those are the 3 options that we can get out of this type of pattern. But the one that I'm excited about is if this candle gives me an inside candle like that, then tomorrow I would be very interested in that trade in that direction. Okay, so similar to the Aussie dollar, the GBP USD is slightly correlated with the Aussie dollar. So if tomorrow we get a setup on both the Aussie dollar and the GBP USD, then you need to make a decision whether you're going to take both or only take one. Okay, and if you decide to take both, and for example, like in this account, I always risk $100 on this account, I might decide that, all right, well, I'll take both, but I'll risk $70. Either way, whatever you decide, please make sure that you incorporate those types of informations into your trading plan, because that's what's going to make your trading more consistent. What you don't want to do is sometimes you take both, sometimes you take one, sometimes you take none. You've got to be consistent with trading. You remember, trading is about probabilities. We need to allow probability to shine through and give us the edge in the market. Okay, so the setup that I'm looking for tomorrow is I'd like to see an inside candle and to see if I can get to a trigger forward. It's the only trade that can possibly happen tomorrow. If this candle ends up coming down and looking like this, let me just draw it out again. Give me 1 second. And I'll draw it in a more appropriate color. Let's pretend tomorrow morning at 9 o'clock you wake up and we've got a candle that looks like this, all colored in. Is that a signal? Yes or no? Okay. 80% of you are saying no, 20% are saying yes. The answer is no, not based off this geometric pattern. That would not be a breakout because it's not in the breakout can only happen, remember guys, the breakout can only happen that way. Okay, it's got to go against the falling wedge, all right? And if it see the falling wedge is down, so breaking down is not what you would consider the type of trade that we take. Okay, so if this happens tomorrow, well then we go back to the drawing board and we look for another trade. All right, so tomorrow hopefully what will happen is we get an inside candle, something like this, and we get an opportunity to trade it upwards. Okay, all right, let me move on. Let's have a look at the next one. Gold. Wow. Okay, I actually highlighted this out on Thursday during Thursday's class. I said, look at gold, it's just made this long run, it's gone out there, and I'll put my hand up. I said, even though it's a proper clear signal to continue to go short, I was afraid of going short because it had already moved so much in one direction. Okay, and on top of that, gold is a little bit different to currencies in terms of how it works of sizing. So, did anybody trade this? Did anybody still, because of their rules, still took this trade short? Rav did. Well done. Anybody else? Okay. Well, as it turns out, it was quite a nice move. There was still a lot of movement down. Now, on Friday, after non-farm payrolls, which is this candle over here that I'm trying to isolate, the US dollar basically gained strength. Okay, everything was good, so the US dollar gained strength. Why did gold move down? Anybody know why gold moved down? Okay. Okay, a few have got, okay, anybody that said safe haven, safe currency, anything like that? Essentially, Imagine you're an investor. This is what investors are thinking. And when I say investors, I'm talking about also big hedge funds, people who manage other people's money, and they're always constantly trying to put that money somewhere to get a return on it. Okay? When the market becomes volatile, when currencies are very, very volatile, um, gold is seen as a safe haven. So basically money moves towards gold. So if the currency market's all over the place, then we don't want to be exposed to that currency risk. So we convert our paper money into real physical gold, which is a metal. Now it's a safe haven because there's a finite amount in the earth. All right, until we find more, we can't make more. We have only what our resources give us. So it holds value relatively well in moments of crisis. Now, as soon as the US dollar showed sign of strength, okay, all this money that's tied up over here, okay, all of a sudden these investors say, I can put my money somewhere else to get a better return. So money moves from those types of things towards, so the gold sells off and it sells off in US dollars goes up. Okay, so does that explanation make sense to everybody? Okay, so that's basically what's happening in those situations. Now, so how do we play this? Now, there's one trade here that I really, really like, but I've caught it a little bit too late. Anybody have any ideas? I'll give you a clue. How many consecutive days have we gone in one direction? Okay, 8 or 9. Let me count. 1, 2, 3, 4, 5, 6, 7, 8 consecutive days in one direction. Normally, it's a kind of trade that I like. If I get 8 or 9-ish days in one direction at the open, I like to do a little counter trend trade. I've already missed it and it's already moved up quite a bit, so I'm not going to touch it. But what I'm going to hope for is I'm going to hope that tomorrow morning when I wake up that this candle actually ended up becoming a red candle, even if it's oops, let me just fix that up. Even if it's just a little red candle like this, okay, if I get that at the open, I'm going to take a long. Now, it's not the type of trade that you stay in there for an entire month or anything like that. It's purely a contrarian type trade. We have done it in the past where we're going trying to get in there really quickly, get a quick buck out of it and get out of the trade. All right. So at the moment, it's 8 consecutive negative days. We are on candle number 9. If this candle tomorrow ends up being a red, it would be 9 days in a row, and I'd even be happier to take it. But the probability is that this candle may have gone up a bit already, and the trade's over. It's it's not a pullback trade, Steve. This particular strategy is not one that I actually teach, but I have taken it with you guys on a Monday before. It's a statistical trade. There's been statistics done that when you get 8 consecutive days in one direction, statistically speaking, the probability of having a reverse day, even if it's just one day, starts to become extremely high. So it's purely a statistical method. It's not a method that I teach because the reality is it happens maybe once or twice a year. And it's not enough to trade, okay? But every time I do see it, I remember about it and I like to take a little trade on it. And Roy says that we're coming towards a hot floor. We're getting there. We're a little bit. Oh yeah, we are. We're quite close to the floor as well. So it would match up. The only problem for us is that I've missed the trade already. I would have to have taken this one at 9 o'clock this morning. So gold this week, let's not touch it. But wait for tomorrow's candle. If that's red tomorrow, well then the door is open for you. Okay. US yen. All right, finally, the US yen breaks away from the congestion and is on its way. Now, it was a difficult one to take. We didn't get clean breaks out of these two candles. This is the cleanest breaking candle, but I feel that we've already moved too much. Remembering that typically the expectation with breakouts is that this target. All right, so if I was to take that, it doesn't leave me much space to go. So it's a trade that does not give me the risk reward that I'm interested in. So I'm going to leave this one alone. All right. However, I am interested in US dollar strength, and I'd like to position myself back in this trade for that 130 that I spoke about long time ago. So what I'm going to be interested in is if we pull back to this area here, I'm going to see if I can buy into the market. All right, so I'm going to place an order right here. I don't know if I'm going to get triggered, but I'm still going to place it just in case we pull back. I'm interested in going in this direction. Okay, if you really want to jump in on this trade, you might want to pull it in a little bit higher up. I'm going to come in, well, give me a sec. Let me see where I want to get in. Okay, I'm going to try and jump in at about an 80 pip pullback, which puts me in around about here. Okay, that's about 80 pips. So, and I'm going to place my stop. I'm going to go for, let me just jump to a 4-hour chart for one moment and I'll have a look. Okay, doesn't really help me. All right, this is what I want to do. I want to get in about here and I'm going to put my stop about there. Now remember, this trade, if I get triggered into this trade, I really want to try and stay until about 130. So we're talking about a long-term trade. Okay, so let me just get some numbers up and I'll place the order right now for those of you who are asking. My entry 122.40. My stop, let me measure, it's going to be about 200 pips. So I'm going to trade at about 50 cents per pip. Give me 1 second, let's put it in. I'm going to go in 0.04, which is about $100 risk. 22.40. Let's make it 22.40 even. My stop 120.30. And my target, let's make it start off with a 128. Just to start me off, and then I'll have a look at it. And here we go. There it is. You can see that it's on my marks that I've put on my chart. Let's zoom out and let's see what the trade looks like. Okay, and my 1-to-1 point becomes, it's about 200. My 1-to-1 point is about there, which is just before that, which is a good point. This is where your first point of action. All right, so everybody clear on what we're doing. What we're doing here, if you think about long-term trades, this is probably the longest term trade that I like to do. I've been pro US yen for a long time, and this is the kind of trade where it's slightly more on the fundamentals. Okay, we've broken out. I'm waiting for a little bit of a pullback to get a better entry, and then I'm trying to hang on to this trade fundamentally that the US is going to raise their rates and it's going to kick this currency along. All right, so that's the reasoning behind that. Question being asked, do we cancel the trade if it just takes off and clears 126? Yes, look, if it just takes off on us and it gets beyond, say, here, then we've missed it. Okay, so hopefully that does not happen because I'd like to be in it, but that's how we're positioned for it. Any other questions on this particular one? No, we're all good. Fantastic. All right, so let me just readjust my chart and I'll move on. Euro yen. Okay, Euro yen, we tracked this last week. We got nothing out of that. We didn't get a single setup. We went by the formation of the candles, we're not going to get a setup out of those three either. So it's very frustrating because we're right at the bottom of a falling wedge and you can feel the trade coming along, but I'm not going to take it unless I get my price action set up. Let me have a quick look on a 4-hour chart and see if we got something. Look, guys, there's nothing strong enough there for me to trade. So Euro Yen this week, we'll leave it alone. All right, it's really frustrating that it's right there. I can feel it, but I can't see it. So let's leave the Euro Yen alone. Let's move on. Let's have a look at the Kiwi dollar. Okay, Kiwi dollar. Is this a legitimate trade? We drew this channel last week. Is that a legitimate trade? Okay. Sorry guys, I was on mute. Can you hear me now, please? Thank you. I'm just looking for a trade. Just bear with me 1 second. Okay, I found this one. let me get rid of these channels now. I don't need them. I'm just late on it though, so this is frustrating. If I've taken this point here from A to B up there, and then do a Fibonacci extension all the way down to here, this is my 1618 level, and look at the price action right there. Okay, inside candle, and it's broken away, and it's already pushing away. So, but I've missed that. But it's a good highlight. I think when you analyze your charts, you've got to look at all the possibilities, see what we can get out of it. I got nothing, guys, this week. Kiwi dollar, we're going to have to leave it. All right, Kiwi dollar, nothing for this week. Okay, let's move on. Euro AUD, last one. And let's have a look. The Euro AUD was another one that we had success with in the trade. You can see there's our mark in there, and we traded down to there. We jumped out of the trade a little bit early. There was my target. You can see my mark. Nevertheless, it was a successful trade for us. Now, let's have a look at what's on offer today. That channel is still in play. That's a 4-hour channel. We've got plenty of touches. We've got 1, 2, 3, 4. We got 1, 2, 3, 4 down the bottom. So the channel is good. Let's see if something evolves from that for us on a daily chart. Okay, I'm just marking out this hot zone, see if there's anything setting up right there. Remember, I'm only looking at the candles that have the fractal, all right, and there's nothing there. Oh. All right, Euro AUD, no trades as well. All right, any questions, anything, guys? Let me go back and summarize what we've got and what we've been able to take, and let's see if we can get something out of this week. First of all, Aussie dollar, let's wait till tomorrow morning. There's a possibility we've got an inside candle on a converging triangle, which will give us a trade possibility in the long direction or upwards. Euro USD, we have placed a pending order. Give you the levels. We are trying to sell at 107.93, stop loss 109.16, 7, and target at 105.63.5. So that's where we're trying to get in at. Euro USD, GBP USD, we're monitoring this falling wedge. There's a possibility of an inside candle formation tomorrow. I'll confirm those, both the Aussie and this one, via Twitter if I see them in the morning. Gold, we are hoping that we get another negative day. If we do, we're going to take a statistical trade of 9 consecutive days, but if it turns out to be blue, well then we've missed the trade by a few hours, missing it this morning. US yen, we've placed a pending order. We're trying to position ourselves for the ride, and we're trying to get in at 122.40, stop at 120.30, and our take profit at 128. So we need a bit of a pullback to get us into this one. Euro yen, we've got nothing. Kiwi dollar, nothing's on offer at the moment, and the Euro AUD, nothing as well. Question being asked, is the GBP USD T-Chaser short now? Let's have a quick look. GBP USD. Let me just open up another chart. I don't want to modify this one. Give me one moment. GBP USD. Let's have a look. Daily chart. Correct. GBP USD. There is a T-Chaser. This candle here meets the criteria. and it's basically ready to go. So you can see how on the Thursday sessions, I always typically show you strategies which are predominantly indicator based. Okay, Mondays I typically work more with geometric patterns or pattern trading and price action. Now I do cover classes on these, and they're coming up in the next few weeks as well. But using a combination of both, sometimes you can jump a trade a lot earlier. Like for example, had you taken the triangle break, you would have been in the trade over here. And then at the close of this candle, now you've got confirmation of a T-chaser. So maybe you've already locked in some profit, all right? And then you hopefully the T-chaser pulls away. It could be like a really, really strong, long-term trade. Okay? Any other questions? We're all good? All right, guys. Well, we've only got 2 pending orders in our system today. As you can see, last couple of weeks have been very nice to us. Hopefully, we can continue that. Now, this week I'll have a look at what we've been working on trends over the last 2 weeks. So perhaps this week we can do something on counter trend. I'll dig something up for us, but as usual, be Thursday at 3:30 as always. Any questions that you have, please send them to me. Respond back to the email invitation that you receive on the day, and I will attend to those for you. Have a great week. I'll see you all on Thursday. Bye for now.